talk about the market, what all has happened from when we actually saw the closing bell up until this morning. Firstly, the global handover, it's a bit of a mixed bag because while you've had the tech-heavy Nasdaq sell off quite a bit, about 2% of the cut coming in, Dow has been okay and Asia is just about a bit of a mixed bag as we speak, largely in the red. But the SGX Nifty or the GIFT Nifty at one point in time was indicating a 100-point downtake. From there, it's made a meaningful recovery. For our markets, we were just about 30 to 20 odd points away from the 20,000 mark yesterday. The August and September Nifty futures have already made it to that mark. But I think the big spoiler today is going to be Infosys, the guidance cut, and that's going to be a howler on the street. And I think the bigger question, Nikunj, today is, can the index do it alone without the support of IT? Because I don't think it'll be just an Infosys-led story. The rest of the IT pack also may fall. But can HDFC Bank, ITC, Reliance take the Nifty higher?
Especially with a weak handover from the global markets.
No, look, you got to ask yourself that we are up 6 days on the trot.
Yeah.
And what has really led to that uptick? The helping hand from IT was not there. It was largely the special situation stock which Reliance had become.
Yeah, even yesterday IT was falling.
Exactly.
Yeah.
So it was because Reliance had become a special situation stock. ITC is now acting like the engine stock. And then you got a smart follow-up buying which is there in financials and especially PSU banks. So if you frankly ask me to understand the market from the prism of what happened yesterday, and I throw in that caveat of HUL versus HUL and ITC, well, there's an L&T buyback also. We are forgetting that. So that is a bit of a good news. So if I put all those three together, you may argue that the market could really hit a pause button, or markets may really choose to consolidate. For me, more than Infosys, I guess it is that Reliance price discovery magic which supported benchmark indices that would be missing, and then Reliance numbers are today. So the moving part in the morning trade would be Infosys. The moving part, at least for second half of the trade and for next week, really would be back to Reliance. My sense is, if you are looking at the day, like we discussed, can markets overlook the Infi fall? Point number one. Point number two, if we have to go past 20,000, will it be a combination of ITC and L&T now? Because Reliance will take a backseat, will banks chip in? And third, why is the market breadth looking slightly rusty? These are the three factors which really would be at play. So in terms of a strategy, just because Infosys numbers are bad, you don't short.
Yeah, absolutely.
Yeah.
Just because Reliance special situation, that price discovery had happened, does not mean markets will peak out. The strategy is simple. Stick to your longs in large cap stocks. Be choosy in mid cap stocks. And I think the craze in the small and mid cap stocks now, you can feel that a lot of mid cap stocks are hitting a pause button if they started retreating. So you go to ask yourself that, was really IT doing the heavy lifting? The answer to that is no.
Yeah, absolutely. But, here's a fun fact. The current rally of the Nifty has actually 51 stocks since yesterday. And India may have received most FII flows, by the way, among emerging markets year to date. But Nifty is not the biggest gainer. If you were to stack up how other emerging markets have fared as opposed to us, so while we have had a large chunk of the FII flows, the market returns have not been as high. And yes, the stock with the biggest weightage, that's Reliance Industries. Guess how much has it gained year to date, Nikunj? Don't look at the graphics.
No. You have to add back the 200 rupees. 260 rupees
Even
for
if you
Geo
add
Financials.
that back.
It would be flat.
13% only.
Yeah, just nothing. And then you add back that 260 rupees, then of course the gains would look slightly gangbuster. It hit by the way, technically you can talk about Reliance Industries, hit a new all-time high.
Yeah.
So that's the point, Aisha. We may be at an all-time high, but the market in this year has not even registered double-digit gains. Second, valuations. So see, this is a liquidity-driven rally. And in a liquidity-driven rally, you've got to be cognizant of what the flows are. Have the flows reversed? The answer to that is no. Are flows likely to go to mid and small cap stocks from global investors? No. So then if flows are strong, if markets have not really reached what could be called as a bubble zone, then I don't think you should be preempting some kind of a sell-off. And I just want to make one more point, and we'll move to Infosys after that. The valuations. For those who are coming and buying India right now, they're not buying India at a very fat premium. Indian markets by and large are still in and around their 5-year premium. There you go. 5-year average 19.3 times. Nifty is now trading just a shade above the 5-year average. So we are reaching that premium level now, but we are not there yet, which means there is still some more fuel left in the tank. All you need is a little bit of support from earnings, and we'll talk about it.
But that's not quite what we got, at least when it comes to the IT sector. So let's discuss that in greater detail then. And here are the key takeaways. The fact that there have been ramp downs and that's led to weak revenue growth pretty much across the board. There's been a reduction as well in headcount. In terms of onboarding and increments as well, delays have been witnessed. Most of these IT companies as well, in terms of the road ahead, have been non-committal about recovery. Although the deal wins have been strong, the pipelines have been strong, the focus on AI, digitization, etc. as well has been strong. And if you were to just look at the guidance, the forward-looking commentary from some of these IT majors, a lot of the heavyweights like TCS, Wipro, Infy, and even an LTIMindtree have trimmed their guidance. It has been maintained by the likes of L&T Tech, Coforge, Mastech, or even an HCL Technologies. And, Nikunj, as part of your commentary about where do we go from here, do you think that this disappointment in these weak numbers, the markets can really overlook it, particularly for IT?
So let's divide it into 3 parts. What's happening in Infosys, it's more like an howler, horrible, terrible, and pathetic set of numbers. Now, Q1 numbers were in line with estimates, but the guidance is where everybody's surprised that why is Infosys not able to gauge and judge the business environment, because for 2 quarters, for a company which had mastered the art of always promising, under-promising and over-delivering, in this case, they've gone wrong, absolutely, sir, for 2 quarters on the trot now. The implications of that, well, that clearly means that if one of the bellwether sector, one of the bellwether company in the IT sector is struggling to find visibility, then that obviously means that there is a fog on the windscreen for the IT sector per se. Now, specifically with Infosys, I think this is also a company-specific problem, which I guess will accelerate the fall. The ADR last night just plummeted, like a 10% plus fall for ADR. So if the ADR logic is anything to go by, the stock will see a gap down, and I will not be surprised that the pressure could continue for next couple of days. Bear in mind, Aisha, Awan, we were discussing this yesterday, that the stock post the TCS run-up had seen a run-up. The 52-week low for Infosys is sub 1200. It is not 1400. So it is fairly, it has seen a charged up move in last couple of days. The question you got to ask yourself is, okay, these are bad set of numbers. Stock will be down by 10%. After today's decline, the decline may well extend itself into Monday. Do you buy Infosys? Now that's a tricky call, because after a 12-13% decline, according to the Jefferies report, the stock will be trading at a discount to its 5-year average. Now that's a call which only long-term investors should take. But today, I guess Infosys will have a collateral impact on the Nifty per se. I think it's a company-specific issue. The problem, what will happen, Aisha, Avan, according to me, is that there was a little bit of change of heart, that where is contract value in this market, and that appeared in IT post TCS numbers. And when you get this kind of a commentary from a bellwether stock like Infosys, which in a sense, like I said, they have a reasonable track record of under-committing and over-delivering, then it just makes you wonder that jo Infosys mein ho raha hai, what is the guarantee it may not happen to other companies? Sooner than later, will they also be admitting the same thing?
Yeah, let's